Multifamily market is shifting towards the suburbs. Hello, I am Gabby with Nex-Gen Real Estate and Property Management Company, serving Chicagoland in all things real estate. The aim of this channel is to keep you informed of news, developments, and current events affecting Chicago's real estate market and investment opportunities. Below you can find other resources that I am working on this year, which I am so excited about, such as my new book, Landlording Your Way to Financial Freedom, as well as my crash course called Guide to Perfect Tenants. Today I will discuss the rise of the suburbs and why developers prefer going there for new projects. As one of the best property management companies in Schaumburg, we at Nex-Gen Real Estate can help you understand the changing multifamily real estate market. Real estate experts concur that multifamily properties will continue to be a resilient asset class in 2023. Now, multifamily developers need to get creative with their means of acquiring materials, incorporating the newest and the best technology, and creating a community in which renters can feel involved. So let's get down to business. Here are the different facets of the changing multifamily real estate market in Chicagoland. First, the multifamily market in Chicago has been put to the test over the past years by shifting demographic patterns and altering lifestyle preferences as pandemic forced people to flee the once vibrant city center for the more calm suburbs. The neighborhoods outside of the loop are much better than downtown and River North, which were severely devastated. Small studios lost popularity as large units gained popularity, and COVID was not the only culprit for this decline in the central business district. Workers who used to live in the city are now marrying and starting their own families. Mirroring the suburban flight of the mid-20th century, millennials are leaving city life for suburbs with more green spaces and better schools. According to Tony Morton, Chief Financial Officer at Independence, Ohio-based Redwood Living Inc., homeowners, especially seniors, are transitioning more to multifamily complexes as their lifestyles change. And second, Chicago faced many difficulties after COVID-19. Notably, in the city's downtown, Crain's Chicago Business reports that occupancy is at its lowest level since at least 1998, dragged down by the pandemic. There was a large increase in workers moving to more suburban locations around the country due to companies' decisions to adopt work from home or work from anywhere models in order to retain people and cut overhead. And even when companies started to invite their employees back to office, the office market lagged significantly, with many companies either moving towards the suburbs or leaving the city entirely. Now, the suburbs are more appealing because more land is usually available for construction. Downtown Chicago is already crowded with several infrastructures underway, building one building after the other. This pushed developers and investors to move further from the city and chose suburban areas. So several real estate developers are investing in suburban areas. This is great, especially for communities to have easier access to several things that they use to travel towards the city. But they also work within a tricky tightrope. They need to reassure the people living near the construction areas in the suburban community. They should prepare and mitigate possible community backlash from impacts of the construction on the townspeople. And one pivotal trend in these suburban developments is the rise of YIBMY, Yes in My Backyard movement. According to Steve Rappin, president of Chicago-based Evergreen Real Estate Group, there is greater public acceptance of affordable projects and an awareness of housing equality. The public is starting to realize how difficult it is for lower income residents to find homes near their places of employment and are more willing to discuss this need and consider new housing options, and will gain momentum in the new year. Now that we've discussed the shifts of multifamily real estate from downtown Chicago to the suburbs, let me tell you which suburbs have performed the best. Drumroll, it's Schaumburg, Arlington Heights, and Palatine. Arlington Heights, Palatine, and Schaumburg are the three Chicago suburbs that performed the best. Rents increased by 15%, with vacancy rates in Schaumburg falling by 550 points from the prior year to 1.9%. Rents increased by 17%, with vacancy rates dropping by 410 points in Arlington Heights and Palatine area. The facts that Schaumburg is a very safe location to live in contributes to the community's success in keeping residents there permanently. Its crime rate is more than 1% lower than the state average for Illinois. On the other hand, the Arlington Heights and Palatine areas also are flourishing. Not only it is going to be the new home of the Chicago Bears, it also became a destination for companies of different industries. The construction of condos, the opening of various food businesses, and the establishment of new companies have all contributed to this revitalization. These three suburbs provide what a current trend of citizens need: a multifamily environment that provides bigger areas and more room they can transform into whatever the residents wish to. And the amenities offered in the respective neighborhoods of these communities set the standard. This is typically more acreage available for development in these areas. Multifamily real estate is one of the most fascinating sectors of real estate. It is subject to many environmental changes, so the COVID-19 pandemic and natural generational shifts really transformed the industry. Ultimately, multifamily real estate developers and investors shifted towards the suburbs because that is where the demand is now. As always, you can find a link below to schedule a free consultation with me. So what do you think about the multifamily real estate market in Chicago? Share your thoughts with us in the comments below. Thanks for watching, and as always, where's your future?